Hello and welcome to the Canaccord Coffee Break podcast. I'm Tom Willis. I am filling in for Jane Parry while she's away. I'm joined today by Tom Hibbert, who's our Chief Investment Strategist in our Chief Investment Office. How are you, Tom?
I'm very well, thanks, Tom. It's good to be here, sat with you.
Yeah,
it's a pleasure to be with Jane, but yeah, good to have a Tom-on-Tom conversation today.
Brilliant. It's my pleasure. So each week our podcast tries to cut through the noise, demystify what's happening in the markets, and help you feel more informed, confident, and in control of your financial future. So Tom, this week it's been a week of political change in the UK. Keir Starmer's resigned as UK Prime Minister and leader of the Labour Party. It's added a little bit of uncertainty at home, but we think the bigger story for markets in terms of the lasting impact is coming from the US. There's been a shift in tone at the US Federal Reserve, with their new chair, Kevin Warsh, already resetting expectations. So you're here to tell us about where markets go next. So grab your coffee and Tom, let's chat and you can help us decode what's going on.
Absolutely.
So let's start at home. It would be remiss not to mention Starmer's exit. Markets have seen relatively calm, but like we said, it does introduce some uncertainty into what is quite a sensitive backdrop in the UK. So where is the uncertainty most likely to be felt in terms of immediately with Starmer's exit and the incoming Prime Minister, which we think is probably going to be Andy Burnham?
It wouldn't be a surprise, I think, to most listeners that it's the gilt market is where the vulnerability is. You know, everyone's familiar with the Liz Truss episode and the pressures that the gilt market has faced in recent months as well. You know, Andy Burnham, the king in the north, he's described, he's seen as someone who could easily sort of want to oversee a further fiscal expansion in the UK. The gilt market will be very sensitive to that. It's sensitive to the borrowing rules, which is almost the UK has built as a rod for its own back in that respect. But there are bond vigilantes operating in the UK bond market that are very sensitive to these changes. It's also a very technical market. So, you know, there are a lot of tourists, speculators in the gilt market, hedge funds, momentum traders, that sort of thing that creates leverage and volatility that ultimately does make the UK bond market quite vulnerable to UK politics. And, you know, UK politics is volatile in itself.
Indeed.
So there is a political risk premium on gilts that I think is valid at the moment. And Andy Burnham, I think, adds to some of that vulnerability with respect to his sort of Manchesterism, I've seen it described as, which, you know, could be related to more fiscal looseness, let's say.
For listeners at home, when we refer to gilts, we mean UK government bonds. So as Tom said, we think that's where the impact will be felt with this political change. So turning to the US, as mentioned, we have a new chair of the Federal Reserve in Kevin Warsh, and his first meeting already felt a little bit different. And you're here, Tom, to explain the kind of changes that he's introduced so far and what it means going forward. So first, do you want to talk about the kind of immediate impact on the current interest rate cycle you think that it will have?
Yes, absolutely. And you know, he took no time in immediately asserting himself, which I think wasn't actually really a surprise. There's been a lot of market chatter about his independence. Is he a puppet of the US administration? And he's proven himself not to be already in the first meeting. President Trump has put a lot of pressure on the Fed to cut rates. His choice in Fed chair, Kevin Warsh, is not putting through interest rate cuts. In fact, we've seen quite a stark shift, a hawkish shift at the Fed from across the committee. Obviously, the Federal Reserve is a committee, but Kevin Warsh as well, you know, he has delivered quite a blunt commitment to inflation control at this meeting. He is what I would describe as a price stability pragmatist, and he does see upside risks to inflation. So the Fed in this meeting has abandoned their easing bias. They're now saying, look, we're not looking at cutting rates. I think the FOMC, the committee that decides interest rate policy, is now tilting in a more hawkish direction. You can see that on the dot plot, which is their sort of expectation of future interest rates. Most of them see interest rates rising this year and next now.
Mm-hmm. And you know, when we talk about the Fed, it seems as if we do talk in binary terms of them being hawkish or dovish in terms of focusing on interest rate cuts or interest rate.
Or a hawk in dove's clothing.
All
That's what
that.
people have been saying about Kevin Warsh, but
But like you said, he seems to be more of a pragmatist and making the right decision at the right time.
yes.
And what do you think then, moving forward from the current cycle, what do you think his long-term impact on policy is, and the kind of philosophy of the Fed, and what they're going to do in the future, essentially, which is probably what investors want to know?
Yeah, he's a fascinating chap, and I've always thought actually that that he was a good choice for Fed chair. And he's not just a sort of price stability pragmatist, which is the term that I use, but he also has a very strong institutional reform agenda. He's looking at reforming the Fed. And he brings some self-reflection to the Fed, which I think is needed, actually, whether that's with regards to the Fed's excessive use of liquidity policy. He resigned in 2011, over concerns about the central bank's use of quantitative easing.
But by which we mean
buying government bonds, injecting liquidity into the market. It's a form of very strong stimulus, which is previously was reserved for periods of extreme volatility to stabilize the market. Well, for a lot of the last 15 years, the Fed has used that policy not to stabilize the market, but to steer the economy. And he's been a very strong critic of that. I think we can go down that route, but I think he will struggle to bring that under control. But I think what's actually really more interesting, putting that to one side for one moment, is his view of forward guidance. So the Federal Reserve historically has provided, particularly under Powell, a lot of guidance in terms of what are they seeing in the economy. What are they seeing from an inflation perspective? What are they seeing from a growth perspective? And then they've guided the market to what they should expect from the Fed. And that kind of creates a little bit of a feedback loop, because the Fed is reading the market and seeing, and then telling the market what their interpretation is of what they should be doing, and the market at the same time is reading the Fed, and it creates this feedback loop. So Warsh is cutting down and refining the messaging from the Fed, and not giving them much to go on what to expect going forwards. So, for example, the policy statement this meeting, the wording that comes around the interest rate decision, was cut from 300 words to 130. And he also talk about the dot plot, which is the policy members' their own expectations of where interest rates should be over the short to medium term. He abstained or refrained from entering his own dot to the dot plot. So he is a critic of forward guidance, expect a lot less clarity on what to expect from the Fed. It means it gives them greater flexibility to react to changes in the economy. And I think forward guidance can be a bit of a rod for the Fed's back. And that's one significant change. Stripped down messaging.
And then just finally moving on to inflation, as you know, we've got the US PCE inflation data coming this week. What should investors be watching out for that? What kind of impact does that have?
Yeah, inflation. So the US core PCE is the main gauge that the Fed uses. That's expected to accelerate a little bit. Core inflation's still quite sticky. Inflation in general is still quite sticky. I'd expect the data this week to sort of affirm the Fed's hawkish pivot in this last week, and that's something that we'll certainly be watching quite closely. But in terms of what we expect from the Fed going forwards, I think it's unlikely that they're going to that they're going to be able to cut rates now. The expectation is certainly for rate hikes.
Okay, to sum up what is in my takeaway coffee cup this week, this was very much a week about reset. So in the UK, there was more political uncertainty, and in the US, there's a clearer, more disciplined Fed, which is focused on inflation. I think, Tom, you will agree that the key message is that markets may have to rely less on central banks or guidance from central banks and more on underlying fundamentals.
Yeah, the Fed in particular, because they're not going to provide that forward guidance to the market in the same way that they have done before. And they say that, that kind of makes a rod for their own back, because then if they have to change their views, it can impact the market, it can detriment the market. So they want to be more flexible given the fluidity of the current situation, but also Warsh is a critic of forward guidance in general.
Well, thanks for joining me today, Tom. I know this is a topic of particular interest for you, and you speak about it very well. So thank you for explaining everything there. And thank you to everyone for listening to the Canaccord Coffee Break podcast. If you've enjoyed it, please don't forget to hit follow where you listen to your podcasts, and you'll never miss an episode. As always, we'd always love to hear your thoughts. You can email us at coffeebreak@canaccord.com.
Thank you very much.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.